What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. So before we get into the analysis, I just want to briefly touch on our new Leutheria Signals Discord channel that we released. This is where you can get unlimited 24/7 access by subscribing monthly to all of our trading ideas related to Bitcoin and Ethereum. So if you want to trade the cryptocurrency markets like a pro, send an email to team@leutheria.com. This is where you can get the information sent over to you to get started joining our Leutheria Signals Discord channel. The first 50 members to sign up this month will get 50% off their first month's subscription, and you can pay in cryptocurrency. So if you'd like to get 24/7 access to all of the different trading ideas related to Bitcoin and Ethereum that we have, you can, like I said, send an email to team@leutheria.com and we'll get you started there. Over the last 3 months, our trading ideas related to Bitcoin and Ethereum have went over 160% on spot for profit, as well as 480% on 3x leverage. So check that out. All right, let's get into the analysis here on Bitcoin. So since yesterday, we pretty much have just continued to dump down. We have not broken the low of the previous week here from June 21st. So right now, we could still potentially pull up here and go up to form. At this point now, it's a lot more likely we're going to form a lower high in comparison to the high that we set on June 28th. So as we're looking at this, this to me looks like a slow fade. And when this happens, typically what you see thereafter is, cascading liquidations. So when you start to fade like this, it's very unlikely for the price to just bounce basically from nothing. We'll look at on the daily time frame where our next daily support level is, and as well as the hourly 8-hour support level as well. But right now, the only thing that's keeping us up right now is an 8-hour support level. So we'll see if that is enough. But you can see we've already bounced off of that level several times here. So it's weakening. If we're a bear, we're very happy right now, sitting in positions. So good news for the bears, obviously not good news for the bulls, but once you get past this point in the market where you have a parabolic rise, then you have this rounded top formation, dramatic decline. I mean, to come up thereafter and just, go to new all-time highs is very unlikely. The market cycle is clearly, the phase of the market cycle that we're currently in is the bear market side of things. And so the profitable trades with more momentum behind them are in fact shorts. So that's something to keep in mind when you're on this side of the market. You can see that this is pretty much where the market shifted. It looks kind of like a mirror. If you look at it from here, the price action looks very similar. So if we're looking at this from a mirror, what happens next in this scenario? Well, if we look back here, we see exactly what happens. It's a drawdown to 19,500. So that is, if we continue this kind of mirror image here, which is pretty much exact. I mean, it's so clean. It's kind of uncanny. We have 2 weekly candles up, 2 weekly candles down. We have one here, one up on both sides. And so it's and then you have high here, and then potentially we're about to see decline over the course of 3 weeks. So we'll see if it takes 3 weeks to get there. That's something I'm keeping an eye on. If we get 2 weekly candle closes below this light blue zone, that'll turn into a resistance zone. You can see that this level held a support here. So if we close below it, it'll likely turn into resistance as well. So that's something I'm keeping an eye on. Let's go down to the 3-day time frame briefly here. This candle closes in 3 hours and 42 minutes. So right now we're about to confirm a 3-day bear trend. So if we look at this right here, we can see we have a high, low, lower high right here, and now a lower low with this candle closing below this low, and now this one likely in 3.5 hours closing below this low as well, which will turn this white candle into a strong resistance zone for price. So this is from July 9th, and this goes from about 32,262 up to 34,600. So that kind of range that we already have some pre-existing resistance inside of is going to be the resistance. And if we look at this, like you can just see in the price section just by looking at this, it's just a fade. It's just the price, like the bulls just cannot get it up here. And so this is causing the price to decline pretty rapidly here over the last three-day candles. So we'll see if the bulls can pick it up here again for, the fourth time in this kind of range down here. So we'll see. If we look at this from a daily perspective, a 2-day perspective, this is where our main untouched support zone is. The first one down here. This is at about 24,350. So that level probably, will see a bounce on the first test, in my opinion, given that it hasn't been tested once at all yet. This dark blue zone here is also a support zone, and that's on the 1-day time frame. But this zone has already been tested once right here. So this is our candlestick back here from December 27th when we came up, formed a high, came down, formed a higher low, and then continued the bull trend. So this, when you're in the trending markets, you're looking for the areas where price had a resistance level, came down, formed a higher low, and then came up and closed above. Because then you see when you retest that, boom, there's your buying opportunity. Ding, nice big trade here. So this level is still the area that we're looking for price to either bounce off of or go below. If it goes below this level and closes 2 candlesticks below this on the daily time frame, we all know what's going to happen there. It's going to turn into resistance level. So that's what we're going to look for there. But you can see that in a bear market, the same exact thing that happens in a bull market is what happens in the bear side. So here, when we have a bull trend and the price goes above, when we come back to it, it's, nice buying opportunity, boom, we go up. Same thing on the bear side. When we have a bear trend, what happens is the resistance levels turn into, the bear trends create resistance levels, and that turns into levels where you can go short off of and then get a nice trade off of that. And so here's an example of that right here, this most recent level. So we have a high, low, lower high, and then lower low. This candlestick right here where we had our support, where we bounced, is going to be the resistance on a retest. We retest it right here, and boom, here's the rejection off of that. So it's simple support and resistance stuff, but it takes a trained eye to recognize these sorts of patterns and structures in price. And then once you do, it becomes a lot easier to calculate, your entry and exit points for your cryptocurrency trades or investments. So that is the daily time frame. Last couple things I want to point out on the daily time frame. Ichimoku cloud still in the most bearish position that this indicator can be in here, with the Tenkin below the Kijun, price below both of those, all three of those things below the cloud, and the cloud is red. So this is most bearish scenario in terms of trend. So the entry here is the Kijun line for the Ichimoku cloud. So if the price comes up to the Ichimoku cloud, which is up right now at 35,000 roughly, if the price comes up to that at any point, that's a buying opportunity. So if we look at this trend right here, where is the buying opportunity? It's on the red Kijun line right here. So if you're playing this indicator, hopefully you entered the trade down here when we had this the most bullish scenario play out right here. So Tenkin above the Kijun, the blue line above the red, both of those above the cloud is green, and price is above all of that. Most bullish scenario, you enter on the first candle close of that being valid right here. You ride that trend, and you just keep riding that until the Tenkin crosses below the Kijun. You're still in. You've been in this entire time. Still in. Here's an opportunity to buy more right here and here. Kijun bounce. Okay, you're still in. Another opportunity here. Kijun bounce. Still in. Still in. You're still in the rise all the way up to all-time high. You're still in. So you could have sold right here. I mean, you could take profits whenever you want, but in terms of this indicator, you would have sold right here. This is where you would have sold. This candlestick. When the Tenkin, the blue line, crosses below the Kijun. Now what happens after that? I mean, this indicator forecasted this entire trend. I mean, this is literally, if you use one indicator, this is the only indicator you needed for this entire trend. So now, what do we have here? Okay, well, the price comes down, and now we have the Ichimoku cloud flip to turn into the most bearish scenario. So now that's what we're in here. So it's the same exact thing, except on the bear side. Same exact profit potential, okay? Don't get it twisted. Same exact profit potential as this side, but it's on the bear side now. So now instead of just going long, you're going short. So where is the entry point for this trade? The entry point for this trade is the Kijun. Same exact thing we saw here, here, and here. Okay, so what happens is typically these movements where you go into the Kijun, they look really significant. Like the price is going to reverse. Like right here, people are thinking, oh my gosh, the price is going to reverse. We're going, this is the top. This is it, But then what happens? We have a nice bounce. Boom, we come up from a higher low. Boom, we trend upwards. We go to a new all-time high. So that trade right there was massive. You look at this same thing, up, new all-time high. So now, instead of going to new all-time highs, now we're going to go, these are our targets, these blue zones. So now, the way we play this is, if we're playing this, and obviously nothing on this channel is for financial advice and is all for educational purposes only, this is where the entry is going to be then on this Kijun line, and that's at right now around 35,000. So that's where we would go short, and we would just be waiting for us to potentially get an entry here at some point in the coming weeks. Okay, lower time frame. If we look at the 8-hour, I promised that I would talk about this. If we look at this, here's our support level that we're currently bouncing off of. It's over here. This level right here. Unless, did we even go into this level? Yes, we did. This candlestick right here, back from December 31st, actually. Interesting. So you can see we tested this here. We did wick below it, but we still bounced off of it. And then, we've bounced off of this already. You can see a couple more times there, here potentially, here, and now here again. So eventually this level's not going to hold anymore. The closest resistance level is this level right here on the 8-hour time frame that we just printed. Very easy to see here. Bear trend, high, low, lower high, lower low. Resistance right there. So that is the level that I am keeping an eye on. That's from about 30,500 up to about 31,000. So those are the levels there. Those are the support levels. Those are the resistance levels. Those are the things I'm keeping an eye on for the good old corn. I hope this video was helpful for you. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com. You can get 20% off that course signing up this month. This will teach you all of the foundational elements you need to get started analyzing price action the way that I do in these videos, so you can forecast price movements in your favorite cryptocurrencies and hopefully generate some consistent profits as well. So check that out, and until tomorrow, onward and upward.